Hey Hadley, yeah, it's been a big discussion here, of course, the impact of the US-China trade war, but there's a lot of optimism, particularly from the technology companies here in China, and one of those big companies here is called the Full Truck Alliance. I've got Richard Zhang with me, the CFO of that company now, to discuss about what they're doing in the space. So you're often dubbed as an Uber for trucks. What exactly does your business do, and what's the problem you're trying to solve here in China?
The problem we're trying to solve is very simple, right? Because there are high inefficiency between matching with the truck drivers and also matching with the shippers, because the empty load rate in the US is only 10%. The empty load rate in China is 40%. Empty load rate is very similar to the vacancy rate in the hotel business. The reason being is that because the market here is highly fragmented, you have highly fragmented truck drivers and now highly fragmented shippers, lots of SMEs. Therefore, what we're trying to do is, before we came into existence, the matching between the truck drivers and shippers was taking place across 1,000 offline marketplaces in China. So what we have been trying to do is trying to bring that offline marketplace to online, and using our algorithms in the back office to actually match automatically between the truck drivers and also the shippers, and trying to reduce that empty load rate to well below 40%.
And what's your monetization strategy at the moment, Richard? How are you making money?
Yeah, monetization strategy, Full Truck Alliance is a product of merger between the two companies, Truck Alliance and also Yunmanman. A little over a year ago, post-merger, we started monetization. The monetization takes in two ways. Number one is we're charging a membership fee for the shippers. And also, this is actually similar to Uber or Didi, we're charging a take rate on the transactions themselves.
I think you mentioned in an interview as well last year that you were aiming to turn a profit in 2018. Did that happen?
We're very close to achieving that objective. We are very marginally close to break even at the current moment, and we have no doubt that we're going to be making earnings in 2019.
I want to ask you a little bit about the future of your business as well, because you closed a huge investment round last year, nearly $2 billion. How much of that money is going into research and development of driverless and autonomous vehicle technology? Mm-hmm.
We think, this is our view, is that the commercialization of autonomous driving for passenger vehicles will probably take a bit longer than people would think. We think the commercialization of autonomous driving for trucks will probably take place a lot sooner than it will take place in the passenger car vehicle sector. Therefore, we are deploying a certain amount of resources into that sector. We do that in the form of investment. So we have decided to be a strategic investor in an autonomous driving truck company for them to actually develop a technology that for us to actually use.
Okay, so you would be relying on a partner on that sense. Okay.
Correct.
And just how far do you think that's off for your business?
The autonomous driving?
Yeah.
We think, well, the mandate for the partner is to actually put a fleet on the road in China to start working with our shippers within the next 12 to 24 months. So that's a mandate, and their ESOP is dependent upon how successful they're going to execute that strategy.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.